Hello, everyone, and let's dive right in and see what we're going to talk about today. Now, I have done some research, and unfortunately, I do think, I hope I'm wrong, that we're not going to see any interest rates below 5% by next year. I just don't think so from what I see and read and the research I've done. I hope I'm wrong, but if we're lucky, I think we're going to get into the fives, mid fives by next year. Now, let's look at what we're going to talk about today really quick. I want to make this as quick as possible. Portable mortgages. So there's big talk about the Trump administration wants to do a portable mortgage. What is a portable mortgage? Some people may know this, some don't. So when you sell your current property by another property, you can move the same mortgage to the new home, meaning you can take your interest rate with you, which is very creative and very attractive, I think. Mostly this exists in Canada, from what I understand. And if you know anything different, please let me know. I also contacted my lender to find out more details about it on my next podcast. So I give you more details about the 50-year mortgages and the portable mortgages. Now, what I know in Canada to be the case is you can have a portable mortgage, but it's only for 5 years. And then you have to get another mortgage, which might be at a higher rate. Also, the issue is that if, let's say, you buy a house or you have a house that's 500,000 and you have $200,000 left on that house on the mortgage, you can transfer that mortgage to the new house. However, if the new house is more, you're going to have to fill that with cash or with an additional mortgage. So it gets a little bit complicated. It may not be all as shiny as it looks from the outside. Now, if they were to be able to make a portable mortgage last 30 years with the current rate, that would be amazing. I mean, that I think would really get the market going. Now, the 50-year mortgages is interesting. I sometimes talk to people who do not own any property, and the first thing they hear is 30-year commitment, 30 years. But this is probably not the right way to look at it, because when you look at the data, National Association of Realtors, for example, states that most people sell the house after 10 years. So every 10 years is the biggest turnover. Now, there are some people who have their homes forever, right? They buy one house, they pay off the 30 years, and they live in it forever, and the generation that does exist. But that's not the norm. So what I'm saying is, if you have a 30-year mortgage or 50-year mortgage, it shouldn't really matter, because at some point you're going to upgrade or downgrade and you're going to get a new mortgage. And you can always end it anytime you want. If you sell your house, then you pay off the mortgage and it's done. Hopefully, it has gained value. One of the reasons I think why the 10-year mark is interesting to me, because if you buy a property in the down market, like in 2008, it took 10 years for the value to come back up to where you purchased it from, because everything dropped, right? So maybe that's a reason, I'm not sure, but the general census is 10 years people move. Here's another thing. A portable mortgage lets you take your existing mortgage and interest rate with you when you move to your new home. It's common in Canada and Europe, but almost never available in the US because of how our mortgage systems is structured. And I have a couple of things to screenshot here. Where is it? Federal Housing Finance Agency Director Bill Pulte said the government agency is actively evaluating portable mortgages, which would allow a homeowner to transfer the loan from their current home to a new home when they move. With portable mortgages, the homeowner would effectively be able to keep their existing interest rate and terms instead of paying off the loan and getting a new one. It's a strategy designed to inject movement into a stagnant housing market, which I think is a great idea. Many homeowners and would-be buyers have remained on the sidelines because they are reluctant to trade their sub 3% mortgages rates for today's loans, hovering around 6.5. Realtor.com senior economist Jake Krimmel told Fox Business that these types of mortgages aren't compatible with the architecture of U.S. mortgage finance, nor would they fix the broader affordability problems facing the housing market today if they were. Krimmel called Pulte's proposal a brute force attempt to solve the lock-in effect. When a typical homeowner moves today, they typically have to prepay their existing loan and take out a new one at prevailing rates. Theoretically, Krimmel said that if that rate gap was the only thing holding back mobility, portable mortgages might unlock some activity and free up inventory. However, Krimmel pointed out to a May 2025 Federal Reserve report that revealed that how the lock-in effect only explained about half of the recent decline in mobility. So anyway, if you have any comments about portable mortgages or are interested in knowing about the 50-year mortgage, the 50-year mortgage basically would just bring down your monthly payments. The housing prices wouldn't change, obviously, which is correct what this gentleman just referred to. But it would make obviously, if you had a 100-year mortgage, your payments would be even lower, right? So anyway, it's just one of those things you have to wrap your head around it. When you buy a property, you don't always own it for 30 years. You pay it off earlier, or you trade, or you move. So these are just some other things to consider. But I'm going to have Ron Glasser from Mac Mortgage put a piece together for me for my next podcast and talk more about the 50-year mortgages and also the portable mortgages. In the meantime, thank you so much for listening. If you have any questions, please call me at 310-918. The number should be on the bottom of the screen, as you can see right here. And then until next time, thank you so much for your attention.